When someone like Jeff Bezos starts selling billions in Amazon stock, we want to know what's the play here. Is he simply shifting into AI? Is he doubling down on space? Or is it just a smart portfolio management? Big money moves like this always have a reason, and today we're breaking it all down. Could their strategies offer us some insight into our own investment journeys? Let's dive into today's discussion. Welcome back to WildPodX. Tony here. Today is 12th of March 2025. On this channel, we break down everything related to money, investing, crypto, and psychology. If you want to stay ahead in finance, be sure to subscribe. Let's kick things off with a quick market update. Bitcoin is currently trading at $81,000, showing a slight uptick from previous close, and Ethereum is trading at $1,870. Over in the traditional market, the S&P 500 has declined by 10% in the last 20 days. Major players like Tesla, Meta, and Nvidia has all seen significant pullback recently. So we can see that Bitcoin's pullback isn't just an isolated event, it's a broader market corrections. Some are pointing fingers at Trump with his recent policy decisions, including introducing tariffs, etc., etc. The thing is, it's very likely that these moves are now priced in the financial market. So any bullish news or signals, such as potential rate cut from Jerome Powell, could reignite market enthusiasm. And a lot of people are asking, does this pullback mean it's the end of bull market for Bitcoin? Or is it just presenting us a golden opportunity? Perhaps looking at companies like Strategy continue their dollar cost averaging strategy in $10,000 range could give us some insight. And let's not forget BlackRock is who's behind Strategy. Do you see them panicking? If not, I think you probably know what we should do, right? And I also want to touch on Bitcoin's dominance is now over 60% again. With that in mind, it's probably an opportunity to dollar cost averaging into Ethereum as well, because Ethereum within $2,000 range seems like such a bargain. Okay, let's get into today's morning deep dive. Back to Jeff Bezos dumping Amazon stock. So what is he buying instead? Is the founder of Amazon shifting his focus to new ventures? Back in November 2024, Jeff Bezos made headline by selling nearly 16 million Amazon shares, valued at over $3 billion. And this move is only a part of a broader plan to sell even more shares for the full year. He sold nearly $13.6 billion worth of Amazon share. Such substantial sales naturally lead to speculation about his next move. One area capturing Bezos' attention is AI. Despite stepping down as CEO, he's dedicating a significant portion of his time to advancing Amazon's AI capabilities. The company is developing numerous internal AI applications and collaborating with ambitious projects, such as a supercomputer initiative with Anthropic. Tax implications also play a role in Bezos' decisions. His relocation from Seattle to Miami allowed him to avoid Washington State's 7% capital gain tax, potentially saving around $600 million on his recent stock sales. Perhaps we can also learn from Bezos' diversification. By reallocating assets into emerging technology like AI and robotics, Bezos is positioning himself at the forefront of innovation. This strategy underscores the importance of staying informed about technological advancement and considering them in our investment decisions. Also, understanding tax implication is also important. Strategic relocation or investment choices can significantly impact net returns. While not everyone can move states or countries, being aware of how local tax law works and opportunity for tax-efficient investment can make a substantial differences. For example, are you making the best out of your stock and share ISA if you live in the UK and Roth IRA if you live in the US? Now let us take a look at today's top news. The first news, Strategy, led by Michael Saylor, has announced plan to raise another $21 billion to acquire additional Bitcoin. Some analysts suggest that the firm's aggressive accumulation strategy is part of a broader push to forerun the next potential bull cycle, with a lot of us believing Bitcoin could soon surpass its previous all-time high. However, it's still important to know that this could be a potential ticking time bomb for the crypto space. The second news, Coinbase is trying to re-enter the Indian market by registering with the Financial Intelligence Unit, FIU, a move that signals its commitment to comply with local financial regulations. Coinbase had previously faced hurdle in India due to unclear regulatory guidelines and sudden crackdown on crypto-related activities. However, with Indian government showing more openness to digital asset framework, Coinbase sees this as an opportunity to regain lost ground. India, with its vast population of over 1.4 billion people, presents an enormous market for crypto adoptions. Considering the rising interest in digital asset among Indian retail and institutional investors, this is quite a strategic move. While the regulatory landscape remains complex, Coinbase's proactive approach could set a precedent for other international exchanges looking to establish a presence in South Asia. And our third and last news, Tesla CEO Elon Musk has introduced an ambitious plan to double Tesla vehicle production in the US within the next 2 years. Standing beside US President Donald Trump in front of a row of Tesla vehicles, Musk attributed the expansion to the great policies of Trump's administration and reaffirmed his belief in American manufacturing. Trump voiced his support for Musk, calling him a great patriot, and also said that he's going to buy a Tesla himself. We all know Musk and his Department of Government Efficiency has sparked controversy lately. Critics has argued that Tesla is receiving special treatment, and some has accused Musk is using his government position to push policy that benefit his business interest. And we see some protesters in New York gather over the weekend to oppose Musk's government job cut, with some accusing him of prioritizing corporate interest over workers' livelihood. Some Tesla showroom and charging station has also been vandalized, reflecting the growing divide over Musk policy involvement. Meanwhile, Tesla stock has taken a hit, dropping sharply as investors weighed the potential risk of automaker entanglement in political affairs. With Musk continuing to dominate both tech and political landscape, Tesla's expansion plan may be met with both excitement and resistance. Whether his bold vision pay off remains to be seen. That's a wrap for today's episode. Please subscribe for latest market updates. Stay invested, and I'll see you tomorrow.